afternoon, everybody, and a very warm welcome to this Concall after the Q2 and H1 results for Gabriel India. Along with me, I'm glad to share, in fact, I had shared last time that our CFO will be joining in the next call, so I'm glad to share that Rishi Luharuka, who has joined us now from September 1st, he's with me on the call today. And along with him is, of course, Nilesh Jain, who's our company secretary. So we are all on the call joining from Gabriel here. So I'm sure you would have had had time to go through our results that we published yesterday after our board meeting. So before beginning the discussion on our financials, let me also set the context. We do understand that the results have been not to what even we would have expected. I mean, in terms of we would have wanted to deliver. But you're all aware of the really tough and challenging market conditions that the auto industry in particular is facing. And also to share that while we have seen many downturns earlier, let's say in 2008 or in 2013. In fact, in those days, Gabriel, the strength of our diversified portfolio definitely helped. But this time it is really different in that every segment, be it two-wheeler, three-wheeler, four-wheeler, commercial vehicles, passenger cars, every segment has taken a really big hit, and not for 1 month, 2 months, as you all must be reading in the papers almost daily. It's been going on for 9 to 10 months. So obviously, yes, this has had an impact on the financials of the company, and not only, for that matter, not only Gabriel, the entire industry. Also, the overall climate and overall sentiment is not improving because our consumer confidence is at a really low level. While yes, the Honorable Finance Minister did announce some measures in I think somewhere in the last week of August, which was expected to dispel some gloom. However, that did not happen. We did have a reasonably good festive month, meaning the auto OEMs. Many of them reported very good retail sales, so that definitely helped in bringing down the inventory. But going forward, while it may be a month or two, which is good, but I still don't see any major revival happening till this BS6 implementation happens, and then it settles down for some time. So that's the overall outlook, from my side, and whatever I could gather from even in the industry perspective. The top OEMs seem to suggest an improvement, as I mentioned, with the onset of festive season, with all this clarity plus clarity, the clarity which was brought about that the vehicles having BS4 will still be valid for the time of registration. So that really helped clear some doubts in the minds of the customer. But still, as I said, it's not really a great pickup we are witnessing as of now. So in these times, we definitely are looking at this as an opportunity to remove all the fat and flap that we had, which happens in any times when any company sees good times for not 1 year but 2 years or 3 years in succession, when volumes are growing 15-20% year on year. So we are using this period to really get back to being lean. So the actions have really kick-started. We are focused on each and every aspect, as I mentioned last time, and these actions do take time. While some actions are immediate, but let's say that even if you have to do some corrections in the productivity side, they have their own cycle time, if I may call it so, to implement. And even in these tough times, one thing that we have not been averse of is continuing investment in growth, in R&D, in automation, in quality and safety. That I can definitely assure you, and we are very much on whatever plans we had in research for the start of the year. So that is the brief industry context that I wanted to set before we get into the individual presentation and the individual slides thereof. So I'll now get on to the presentation. I mean, I've not discussed the industry figures in terms of the percentages of drop that we have seen, because I mean, I'm sure all of you, every day when I open the newspaper, I think there is at least one article on auto industry telling what kind of drop the industry has seen. But just to share with you, overall, the industry, the commercial vehicle industry is still badly down. The drop in MCVs, if you see Q on Q compared to last year, it's almost to the tune of 50% plus. LCV is almost 26%. Passenger car is 24%, and motorcycles and scooters are around 15% drop. So this is what is the broad figures as far as I know. Now I'll get into the presentation. I would request you all to look at the slide 3 of our pack with the title Financial Highlights for H1 FY20. As mentioned, the revenue was 990 crores in H1 compared to 1,056 crores. So you can see almost a 70 crore drop. While we had a good first quarter in terms of sales, we were able to hold on because particularly on account of good growth in the two-wheeler that sustained in the first quarter. The impact of this drop has, as far as Gabriel is concerned, has come starkly in Q2. That's where the volumes are really, we have seen a big drop. So that's on the revenue part. EBITDA for H1 is 72 crores compared to 100 crores in the corresponding period in FY19. So the margin obviously has dropped from what we were earlier. We'll of course come to that later. PAT of 40 crores in H1 compared to 55 crores in FY19. So PAT margin remains at 4.1%. The good part is our focus on cash flow, which we have always mentioned in the previous calls as well. That has remained intact, and we have had good cash flows from the operations to the tune of 64 crores in these challenging times, in these downturn, where compared to 35 crores of cash flow in the similar period in last year. So that focus continues, and we are actually using this time, as I mentioned, to relentlessly focus on inventory. We have revised our norms and implemented a very robust program to ensure that we do not come back to levels of inventory which were earlier. So this, as I said, is an opportunity that we certainly do not want to lose as a company. Balance sheet, net cash position of 105 crores, and as regards to dividend, we had declared an interim dividend after a board meeting yesterday, after deliberations of 45 paisa per share as interim. So this is on slide 3. We move to slide 4, which is quarter on quarter. As you can see again here, like I mentioned, the drop happened in Q2 as regards the sale. First quarter we were pretty much on the same level, about 510 crores of last year versus 510 crores of this year. But the huge downfall happened in Q2, where last year we were at 541 crores, and Q2 of this year we have done 473 crores. And obviously that has had some bearing on the financial numbers below. There has been, compared to last quarter, and as you must have seen even in the last quarter, there has been an increase in raw material cost, which is actually a mix of a product mix, a segment mix, as well as we have had, again, unfortunately, adverse conditions in the export, which we were doing in the specific markets. So even that has, exports were actually at good profitability margins and good RMC, raw material cost margins. However, you can see, in terms of the expenses, other expenses, where we have been able to reduce from 10.9 to 10.3. So you can see in terms of absolute numbers, these numbers are far more, larger, because the base is in fact now, the base is lower as regards sales. So we have done, as I said, we have done a lot of cost-cutting measures across the company in every aspect, and this you can see reflecting in other expenses. Employee expenses, yes, as I mentioned earlier, when the denominator of the sales is down, this figure will naturally be adverse. But here again, we have taken quite strict measures, and the results, part of which have already come. Otherwise, this figure would have been more adverse, and you will see improvement in these figures going further as well. So EBITDA percentage has dropped from 9.5% to 6.6%. PBT from 7.9 to 4.7%. So this is on slide 4. If slide 5 is as regards, we just saw the Q on Q. This is half year on half year, which was summarized in the first slide. So I won't spend much time on it, and move to slide 6. Which shows the segment mix, and here you can see the change in the segment mix that has happened. So two-wheeler has gone up to 69%, which is part of it is because we have had better volumes in two-wheelers due to some efforts that we had taken in improving our market share, as well as some of the models that are doing well today are with Gabriel products. So that's why the two-wheeler in fact has done better. Passenger car, it's exactly the other story. The story is exactly the other way, where one is the models that we were serving have either got discontinued, which I had mentioned in the last call as well. Mainly in terms of Maruti van, because they don't comply to crash norms, and also the Wagon R, which got replaced by the new Wagon R, where Gabriel is not a source. So this has caused a big change, and in addition. Now you are seeing a larger market share being taken by Hyundai and Kia. So on both these platforms, Gabriel is not a supplier, but glad to share here that on Hyundai, we do supply the piston rods, a component to Mando, who supplies the shock absorbers, and we are currently almost on the verge of validating the piston rod for Kia Motors as well. So we'll be a tier 2 supplier. We are not tier 1. So we still are part of that story of growth, which is due to Hyundai and Kia. But and the other good part here in passenger car is that Espresso, the Maruti Espresso, which got launched a couple of months back, where Gabriel is a single source, that is doing well. As you must have read, last month it did almost 10,000 plus cars. So that has started, ramping up. So that will certainly, help us going forward. In addition, the Brezza, which was cut down in a significant way. In fact, last year we had ramped up to almost 750 cars per day. That came down to as low as 30 cars per day in the second quarter. That also has seen a revival. So Maruti has really revived that product, and people are actually now buying the PS4 diesel Brezza, because Brezza is right now being offered in the diesel version. The petrol version is due for launch shortly, which will be a BS6 petrol version. For that model as well, Gabriel is a single source. So that way, I'm certain that this passenger car percentage as regards our segment mix will definitely improve going forward. Commercial vehicle, I did mention that the drop has been significant. We are seeing 40%, 50% levels of drop in production volumes, in fact, maybe even more in some cases. And that segment has still not revived in the sense, even that small revival that we saw in the month of the festive season, we don't see that happening in the commercial vehicle as of now. Coming to the channel mix, here glad to share that aftermarket continues to do well despite the scenario that is prevailing. And in fact, as I understand, even from a group perspective, the aftermarket is facing a huge challenge, of growth. But Gabriel continues to do well in this segment, and we continue to post reasonably good growth in aftermarket. even in these times. So I've moved now to slide 7, which is the graphical representation of the numbers that we discussed in revenue, EBITDA, and PAT. Yes, what is very clear here is the drop in margins on EBITDA, which I did explain. The point is that we had taken some actions in the first quarter itself, but the volume drop that happened in Q2 has been really, really stark. So that has, so we have taken the actions also. In fact, we had already kick-started that. The actions are also, more stringent now. The effect of which will happen only later. But yes, we definitely would need volumes, which I presume may happen only in the last quarter of this year. Typically, Q3 as well, you all know, is, in terms of November, December is cyclically a low month. So we'll see how it goes from here. Coming to slide 8, this is the balance sheet. I'm sure we have already mentioned net cash position of 105 crores, and our cash accrual as well has been quite robust, which I already mentioned in the first slide. The point to be noted here is the capex, which we had mentioned. We are continuing to stay at around that 70 crore level for the year. Mainly, this is on account of the Sanand plant, which is now almost fully functional. We have the customer audit planned in the next month. So the start of production should happen sometime in the month of January or February, because this had got, based on the customer timeline, had got shifted by 2 months. But the plant is ready, and we have tried to make a very modern plant with implementing the latest IoT or the Industry 4.0 techniques, and also are trying to keep it, maintain a green building in that plant. So these are some things new that we did because it's a new plant. We said we use this opportunity again to have a efficient and sustainable plant going forward. Moving to slide 9, as regards the ROIC, we are still in these, 21.9, yes, is certainly a drop, but you have to view it with the lens of, the significant downturn that the industry is facing. So we have still maintained ROIC rate of almost 22%, and this focus will continue. Slide 10, in terms of cash flows, maybe we can have questions from you when we open up for questions. I'll move to slide 11. We continue to be a great place to work. Now we have got 5th year in a row. So that really shows that, like our annual report you must have seen is a culture called people. So that this is reinforced further because 5 years in a row getting its recognition is really creditable. Not only that, this year we have also got best workplace for women to work for. So that is in the next slide, which is slide 12. So we got recognition from the same Great Places to Work and Economic Times as we are among the top 75 best places to work for as regards women, which has been a focus area for Gabriel as well as Anand Group. We have always promoted women employment. We have a target of 30%. As I'd already shared, some of our plants operate at 50% women on the shop floor. So this is something very close to our heart, and we keep doing our best for encouraging this further. This slide 12 also shows some awards that we won within the Anand Group. We have these are the Apex awards at the Anand Group level. I had already shared customer awards, which typically happen in the time of April, May, June, when the vendor meets of customers happen. So now there are no, obviously there are no customer awards, but these are our Anand Group internal recognitions, which are done every year within the group companies. So Gabriel won 4 awards in supply chain, in R&D, in business development, and in the best plant to work as far as human resource practices are concerned, which is Gabriel Parvano. So these are some of the awards that we have, shown in this slide. So that's all that we have for, what we have shared through the presentation. We are now open for question and answers, and keen to listen to your feedback and your observations, and we'll try to answer them. And yes, we all hope that the downturn really, at least reduces. While having said that, we all have to be real. We don't see any great changes that are happening in terms of the marketplace or the business, the customer sentiment. So it's going to be a tough quarter, tough couple of quarters. As I said, till the BS6 introductions happen and then the dust settles down. And if there are some, of course, some more interventions from the government in terms of, improving liquidity, improving sentiment, certainly this will help. So with that, I'm now opening up for any questions from all of you. Thank you.
Sure, thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask questions may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask questions, please press star and 1. The first question is from the line of Arun Agarwal from Kotak. Please go ahead.
Good afternoon, sir. Thanks for the opportunity. So my first question is on if you could just help us out with the growth in different segments that we saw during the quarter. So how much was it for two-wheeler, passenger vehicles, and CVs on a year-on-year basis?
Growth on a year-on-year basis?
Yeah, on a year-on-year basis, yeah.
For quarter, right?
Yeah, for this quarter, yeah.
Okay, so the figures of passenger car, as I said, are pretty. They're not good. Due to reasons I already mentioned, that we have had a degrowth of almost 50%.
All right.
Not passenger cars, it's passenger cars and UVs and vans.
Yeah, the passenger vehicles, yeah.
Right. And in terms of LCV, it's more or less mirroring the industry. It's about minus 30% in LCV and minus 59% in M&HCV.
All right. And the two-wheeler segment?
So two-wheelers, while the market mentioned, the scooters and motorcycles have dropped by 14-15%, we have actually grown by 3%.
Okay, there's a positive 3% growth there. And could you highlight from where exactly we have gained a business in this two-wheeler segment?
Yeah, so several things. One is we've been working on improving market share in one of our key customers, so that has happened. And in addition, the Java model, which is doing very well, the retro style model, launched by Mahindra and Classic Legends.
Right.
So that is doing very well. We have, in fact, in the month of October, we have ramped up to almost 220 per day. And in fact, they want us to ramp it up even more. So that is doing well. And similarly, in Royal Enfield, while they are also facing a lot of challenges in terms of growth, but their model, which is the Twins, they launched, those are doing well. And again, it's a Gabriel, 100% Gabriel product.
Okay.
So, and in addition, even the Suzuki, the new Gixxer that they introduced, so even Suzuki models, a couple of them which we are there, those are doing well in the marketplace. So, all this put together, so one is due to our efforts in terms of improving market share, our efforts in terms of developing new products, that has paid off, and the products have finally are doing well in the market. So that naturally is.
So, sir, so the growth basically is coming in from the new business or the new models that we get in business and that started in the past 12 months or so.
That's right, and partly due to business share increase.
Yeah, but that would be because of new businesses that we would have gained. But
even in existing.
Okay, even in existing models we are increased the
right.
Okay, and that would be with TVS, is it?
Yeah, with TVS.
Okay. In the passenger vehicle segment, we talked about 50% decline on year-on-year basis. So apart from Omni and WagonR, are there any models that we have lost business or would have been discontinued that we were supplying to in the past 12 months or so?
of course, one of the Alto models also got discontinued. And in addition to that, well, the Volkswagen, where we are single source, even that, domestically, they are running the same platform for long. So obviously, that is also not doing very well. But having said that, their exports continue to remain strong, and we supply for the exports. But talking about domestic, yes, that is what has caused a difference. And like I mentioned, there is a change in market dynamics in terms of Hyundai and Kia, and let's say even Hector. While Hector volumes are not very big as of now, but all these are doing really well, where we are not on those platforms.
Okay, but anyways, Hyundai we are supplying through.
Hyundai, some of the models we are supplying, like the Creta, we are supplying the piston rod, and now we are almost validated on, as I mentioned, on Kia as well.
Okay. My second question, sir, would be if you could also highlight during the quarter. We have the first half numbers, but during the quarter, if you could just highlight how much was two-wheeler passenger vehicles and CVs as a percentage of revenues.
It's there in the slide.
That's the first half figures that we have given. So for the second quarter, if you could just share those.
Second quarter, in fact, two-wheelers gone up further. It's about 70%.
Okay.
And passenger vehicles is 18%, and commercial vehicle is 10%. But commercial vehicle, as you know, we are practically single source. So we are actually mirroring the industry. There's nothing that lost or, for that matter, even gained. But yeah, that particular industry is really struggling.
Sure. Okay, sir, my other question is on the margins front. So basically starting with the raw material cost first here. See, historically, if you look at the last maybe more than 10 years data for Gabriel, which captures, various down cycles as well. We have been pretty much, moving in the 71, 73 kind of, RM to sales kind of range. But now for this quarter, we have moved up to 75%. So is there some change that we are seeing, or is it just purely that, I know you highlighted the reasons also could be because of product and segment mix, but apart from that, are we seeing any pressure, coming in from the OEMs for the past 2-3 quarters or so, where we are seeing sustained higher raw material prices, and that too despite in a scenario where the commodity prices actually come down in the past few months now?
Yeah, so one is, the commodity reductions are still not entirely concluded, so that effect has not fully come, which will be coming going forward, because there is, as mentioned, there is a lag. And also, you have to understand that in an upcycle, what happens when the commodity keeps increasing, the OEs are also under severe pressure to reduce cost. So yes, there has been a bit of pressure from the OEs to absorb, and we get corrections to the extent of the raw material part only. Yeah. So naturally that impacts the overall percentages adversely. So now this is a time when we will try to, of course, make some corrections. That process is on. Also, I mentioned on the model mix. Some of the new models which got introduced, they are at a higher RMC, but we will definitely be, as the model stabilizes, we implement all the cost reduction measures. That will also take effect. But yes, as of now, it's on the higher side.
Mr. Agarwal, I'm really sorry to interrupt, but maybe request you to return to the question queue for follow-up questions, as there are several participants waiting. Thank you. We'll move to the next question. The next question is from the line of Dhiral Shah from Phillip Capital. Please go ahead.
Yeah, good afternoon, sir. So my question is regarding particularly the commodity cost. So when we are in a downturn of commodity cycle, then sir, which kind of cost, are we not able to pass it on?
Pass it on meaning?
Because you just said, some of the commodity, cost we have not passed it on, fully. So when we are in a downturn, when we have seen, steel and all that prices are falling down, so which, cost we are not able to pass it on?
No. It's not passing on. Basically, see, what happens is we are, on commodities, we are back-to-back with customers, with most of them. The cycle varies. Some are in 3 months, some are 6 months, some customers do a yearly settlement. Okay. What happens is there's a lag effect. Now, till almost, early this year, we had seen the commodity cycle continuously increasing. So what happens is when there is a continuous increase for quarter on quarter, the OEMs are also under pressure to meet their targets. So obviously, sometimes the entire commodity is not compensated. So that has put some pressure on the margins front. In addition, this is part of it, but as I mentioned, the product mix has also been unfavorable. But in the down cycle, the commodity corrections have started taking place now, and of course we'll be definitely seeing that improving going forward.
Okay, understood, sir. And sir, in terms of margins, when it comes to, let's say, segment mix, so which segment gives you the higher margin? Is it CV or passenger car or two-wheeler, three-wheeler, sir?
CV definitely gives a good margin. Two-wheeler as well. But those two give good margins.
Okay, so it is almost a kind of a double digit or near to the double digit?
We don't share. No, anyway, we don't share the margins because, as you know, Nirav.
Okay. And sir, lastly, regarding your exports, sir, your export contribution has fallen down to almost half, let's say 2%.
Yeah.
So what is the reason and how we are going to cope up, sir?
Yeah, that's what. So see, we had got an order from Isuzu for their global platform in Thailand. Their volumes, what they had indicated, were far higher. So that is, their volumes are not materializing. So that is one reason. And second is, one market which we were doing well was Colombia. We were exporting to the LATAM. So that there has the model. One was the market in Colombia had gone down, but that has now recovered. As you know, generally the LATAM markets have started improving now. But our model got discontinued. So the new model is under development. In fact, the new model should start. We should start supplies, but.
Participants, please stay connected while we reconnect the management line. Participants, thank you for patiently holding your lines. We have the lines of the management reconnected. Over to you, sir.
Yeah, sorry, the call got dropped, I guess. So I was answering Mr. Nirav's question on the exports part, where I tried to explain. I don't know, Mr. Nirav, could you hear or
yes.
did you?
So you were talking about Colombia.
Yeah, so Colombia, the model that we were in has got discontinued. The new model is going to be launched, but the supplies for that will happen, unfortunately, only in the next fiscal. That is one reason. The second reason I mentioned was one other model for the same market. We were exporting directly, but now the OEM has started buying that in India and exporting by themselves. So that has got converted from exports to domestic.
Okay. And sir, lastly, even in Kia Motors, we are going to supply piston rod?
Yes.
Okay. Okay, thank you, sir. That's it from my side.
Thank you. The next question is from the line of Jaimin Desai from ICICI Direct. Please go ahead.
Good afternoon, sir. Thank you for taking my question, and congratulations on such a strong performance in the two-wheeler segment during tough market. So my first broad question was in relation to our longer-term vision. We have a stated vision of breaking into the top 5 global manufacturers. Could you indicate what level of turnover would that entail? What is the likely timeline for that you're looking at, and how does the ongoing slowdown affect those plans?
Yes, obviously, I mean, the vision remains intact. I mean, yes, there's an aberration because of the current slowdown, naturally, to the extent of our, top line growth. I mean, again, that's for the entire industry. I think the whole thing, if I may put it that way, it got reset by, I guess, 2 years now. Okay. Vision may get extended, but vision remains intact, and we will continue to pursue that vision regardless of what is happening, in local market. The question about what could be, the top line.
Yes.
Yeah, the top line, I mean, obviously, while we have not stated the top line, we want to be in the top 5. We are currently in the top 10. We are, let's say around 8. Because we don't have data of all, but that is more in terms of by the units or the volume,
okay,
not by the revenue. So typically top 5 obviously are in the range of, currently if you see, all top 5 are in the range of $1 billion. So
okay,
while that is really a huge step, we are looking at being in the top 5, definitely from our quality, from our presence, from our volumes. And yes, I mean, if all goes well, may the volume, the top line as well. It's a directional figure, like any vision.
Understood, sir. And how do you see the segmental mix evolving that would enable us to reach this long-term vision?
Yeah, we definitely will have to improve in terms of commercial vehicle and passenger cars, because two-wheelers is mainly a India or a China play. I mean, so dominant markets are these, and maybe, yes, definitely ASEAN countries. So clearly it has to improve further in the space of commercial vehicle, passenger car, and aftermarket. Aftermarket is a huge potential, globally, while in India it still is not so big. Globally it is much larger.
Right. And sir, how do you see the railway contribution evolving for this?
Railway, I mean, that will remain a domestic space itself. But yes, since you're mentioning on railways, we are doing very well on that. We have had good growth. In fact, compared to last year, we don't share the figures, but in terms of how much is the top line. But I can only tell you that the growth has almost been in this year. It's almost to the tune of 2x. It's almost doubled.
Okay. So my next question was in relation to say Aether and Okinawa, where we are, which we count among our clients. Just wanted to get a sense on, is the technological aspect any different for these for the EV OEMs or from the other ICE OEMs, and is there any difference in terms of ASP for these guys?
Yeah, so there is no difference as regards the product is concerned. As of now, I must say, I must qualify that definitely in two-wheeler space, I don't think there will be any big difference. It will continue to be the same product that we offer. The selling price, currently our realizations are a little better because, all the EV players are, I must say, flush with funds. So our realizations are better, then they also compensate for all the development costs, etc.
Right.
However, the volumes are still a long way off. But yes, we are very well entrenched with all the two-wheeler EV players. But when it comes to passenger car electric vehicles, while we are supplying to the Verito, e-Verito, e-KUV, we are already supplying to those models, and they are doing well. We have not done anything different for those products either. But going forward, if you ask me, my view would be that naturally the refinement levels of shocks will have, the shock absorbers will have to be better, because the in-cab noise levels of electric vehicles naturally will be much better. The vibration and harshness of a vehicle, as they call, that is going to be at a much better level than IC engines. So, yes, we will have to, improve the refinement of shock absorbers. That will be the change in passenger cars.
Understood, sir. And lastly, sir, if I can...
Yes, I'm really sorry to interrupt, but request you to rejoin the queue.
Sure, thank you. I'll do that.
Thank you.
Yeah, thanks.
We'll move to the next question. The next question is from the line of Ayaz Motiwala from Nevalis Partners. Please go ahead.
Yeah, good afternoon. Thank you for taking my questions. My first question is a comment that you made, sir, on the nature of this downturn and the diversified model of Gabriel in the past, in 2008 and then 13, which you have mentioned that it's been a very tough one and it's been across the board and never seen in so many years of the existence of the company itself. So while one has read a lot in the newspaper, etc., what I would like to hear from you, because you interact with the OEMs versus our level of understanding, is to throw some light on the factors which have gone into this cause of this downturn across the board, all sorts of type of vehicles, and are you seeing any of those factors improving which caused the downturn? So that's my first question, sir. And the second one I will ask you on the two-wheelers once I hear some thoughts from you on this one, please.
Yeah, Mr. Motiwala, thank you for the question. So, the question that you asked me, the entire industry is actually grappling to come to a consensus as to what has caused this kind of a downturn, and across every segment and for month on month on month. So you must have again read, even yesterday, I think Mr. R.C. Bhargav, nobody less than the father of, if I may call, the Indian car industry, he himself told that he doesn't have much clues as to why this market is behaving the way it is. So it's really, really difficult. Like somebody put it very well, we are suffering. Our body is suffering from 1,000 cuts. It's not one big fracture or one big cut that has happened. It is multiple cuts. So it's right from the post effect of delayed effect of GST demon to this confusion about electric vehicles being introduced sooner, BS6 norms, and of course the cost going up because of addition of these norms. So and yes, the liquidity condition in the market. So I think there are so many reasons that are creating this current downturn, and the only issue is it just doesn't seem to be easing off. Even after we had two interventions from the finance minister, you must have seen that it actually didn't create any great excitement in the market. So it remains to be seen how long it will take. So what I mentioned is a kind of a consensed industry view that things will settle down only after first quarter of next year, when the BS6 introductions will happen. But the good part is, let's talk about, let's say Maruti. They have already converted all their petrol models to BS6, and they did among the highest retail sale they had a positive month after so many months in October. They did almost 1.8 lakh retail sale, if I'm not mistaken. So BS6 is being accepted at the price levels that are being given, at least in the gasoline part. So if I take some clue from there, the petrol portion of the car sales will remain good. Two-wheelers, maybe we'll have to see, that will be a big impact. And commercial vehicle, we know it's going to be a significant impact in terms of the price.
Just one quick question on that as a point. You mentioned about the two Korean, sort of group companies, Kia and Hyundai, doing quite well, and you are a sort of an indirect supplier in one of them to Bendo. They're doing well at the end consumer level as well, as you would appreciate, sir. And you mentioned about Java as well on a different sort of two-wheeler side.
Yeah.
So is there also some sort of thing, there is a response from the consumer side which some of the bigger companies are missing, and there's a change in market shares which may happen, and while you are still got a very solid big business at your level, but are we seeing some sort of shift taking place? Like in three-wheelers, we had these e-rickshaws taking big market share, and the population base is nearly 1 million, as is talked about with sort of not clear statistics, but something of that sort, sir.
Yeah, so, very right observations. See, if any OEM launches let me call it a drop-dead gorgeous product in the passenger car space at a good price point, naturally it will excite any customer in any market. So what the good part that we have to take from that, and some encouragement we have to take from that point, is that there are customers still wanting to buy and aspiring to buy these cars. If they're good, or let's say even a new two-wheeler which is introduced. You mentioned about Java. So
right.
To that extent, yes, certainly any new product. But again, we have to remember that any new product that gets introduced will have what I call euphoric sales, which lasts for give or take 6 months. Then a new product comes, replaces that product. So that's the normal cycle. The only thing that we have to take is that this product cycle is becoming shorter and shorter.
Right. And so the last question I had on two-wheelers very quickly is, do you have a sense on the replacement quantum versus new customers coming into the two-wheeler market? Because we've read some studies where it seems that the core commuter two-wheeler bikes now seem to have reached a point of pretty high penetration. It's not very substantiated in terms of data. So if you have some thoughts on that, on the new customers coming into the two-wheeler fold, are they coming at the rural end? They seem to be coming, and at the power or the leisure bikes also. So how should we understand the replacement market versus the new market for two-wheelers in the short to medium term?
Yeah, your observation is right that there is a saturation that is happening in the metro cities. That is a clear data point that even I have seen. But tier 2, tier 3 cities, the penetration level is there is still scope. Again, if you talk of the per capita, the figure that the entire world goes by, be it cars or be it two-wheelers, our penetration level is still far lower than, while two-wheelers is still better, but passenger car is still at 22 per thousand. So it's far lower than what even very average countries in the globe have. So yeah, I mean, what I mean is, while there is saturation in the metros, but there is still scope in tier 2, tier 3 cities and rural markets.
Thank you. Before we take the next question, we'd like to inform participants that in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to one per participant. We'll move to the next question. The next question is from the line of Shashank Kanodia from ICICI. Please go ahead.
Yes, sir, good afternoon. So just wanted to check if you can give us some sense on the content per vehicle across categories, be it two-wheelers, four-wheelers, and CV.
Yeah, Mr. Kanodia, again, sorry, but we don't share that figure as I mentioned. But yeah, just to tell that content is highest in the passenger car, followed by two-wheelers. In terms of our revenues, that is the highest in terms of passenger car. Next comes two-wheelers, and the next is commercial vehicles, and three-wheelers is the lowest. Okay, if you add railways actually the content per coach or per train is the highest. There is no doubt on that. The volumes are very low. So
is it something like 400 rupees a piece in a two-wheeler and roughly 1,200 a piece in a four-wheeler?
No, it's much higher than that.
Okay. And secondly, sir, in an annual report, in the other expenses head, there is a line item wherein you mention legal and professional fee, wherein on a consistent basis we've been paying 48-50 odd crores annually, which is good 50% of a PAT. So just wanted to understand, this is on account of what?
Mr. Kanodia, this figure has been same. I mean, we have the same management fees, which is from April 18, it's at 2%, so that doesn't change. Yeah, currently the market is down, the PAT is down, I mean the financials are down, so actually that looks a bigger chunk, but it goes on a percentage basis, which is paid to Anand Group for, of course, one is the brand Gabriel, second is all the services in terms of HR, in terms of audit, in terms of business development, in terms of so many aspects, because in auto industry the OEMs always look at us, or in fact for that matter any Anand Group company, as part of Anand Group. That breaks ground much faster than anything else. Now, if we were the standalone company and they have to talk to different people, it becomes difficult. They would want a one-stop shop, one window. So that's how it's been with all our JV companies, in fact. And that figure has not changed, so it's remained the same.
Thank you.
Thank you.
The next question is from the line of Mitul Jani, who's an individual investor. Please go ahead.
Yeah, thanks and good afternoon. My question is directed towards Mr. Rishi relating to finances. Since taking charge and post the fact with the scenario in auto sector, and now the half-yearly results are out, looking forward, where would you like to further improvise as far as companies' financial policies are concerned? Also, as now dividends are announced, targeted around your near past average dividend payout ratio, and companies going ahead with capex, how do you plan to deploy remaining capital as well as cash moving forward in the business? Given the returns are now heading lower bounds towards south, what steps would you be taking? Kindly share with us your views on financial policies and capital deployment moving ahead. Mr. Manoj, if you'd like to add something to this, please do so. Thanks.
So I'll just start off. Rishi is with me. He'll join on that. But as regards financial policies, like I mentioned, we have tightened norms across in terms of expenditure. Obviously that is the order of the day. We have kicked off a very structured and very aggressive program which is called CORE, or cost reduction, CORE, and which we review every week at the highest level, including me and all the leadership team. There's a weekly review, so we are driving down costs at each and every, not leaving any stone unturned. Absolutely. It's not just rhetoric that I'm using. So that is continuing. In terms of financials, we have reduced our inventory. Just to share some figures from what was earlier, we reduced it over 30 crores in the last couple of months. We have reduced our headcount to the maximum extent possible. Wherever we can, we can do it in a fair manner. So those actions continue. Those are changes in policies, if you may call, that we have done. And naturally the low-hanging fruits of obviously the travel costs and whatever are the controllable costs, as we call, have been cut down significantly. We're encouraging video conference, which is helping us actually in a big way, not only in terms of cost but freeing up our time. So some actions that we have taken at the ground level. But yeah, Rishi, you want to add?
Thank you, Mr. Jani, for that question. To bring one perspective into this conversation is the fact that how well we've managed the NWC in this particular period. If we look at the cash flow comparables as against the H1 of previous year, generated a lot of cash out of the management of working capital. So to extend that thought, the idea going forward is to absolutely keep a strong hold on these, to further look at further reductions in terms of both inventory liquidation as well as realization of debtors. With that, hopefully the cash flow would stay as strong as it is in this half year of this year.
It's because sorry to interrupt, the first half has been the results are out, but you or I can assume that the same things would be there in coming 6 months. So dividends, you are giving dividends. So with the same thing happening or further slowing down, I guess the cash and capital would be affected. So the reason to ask is that how will you manage?
If we look at the full year numbers, we are fairly certain of not being cash trapped. That's one. Mr. Kolhatkar already has mentioned the strong cash position. Even if we take off the dividend that is being mentioned, the cash position is fairly favorable for us. On the capex front, a large amount of that capex is already funded. So the outflow in terms of cash for capex is fairly low going forward as well for this year. So to that extent, the cash as an issue, I don't see it.
And any improvement on the pricing front which could affect the bottom line in positive sense, which we could expect?
Yes, Mr. Jani, yes. As I mentioned, we are in discussions, and now the down cycle of commodity has started. So, we actually these are the times when we try to get some margin improvement because OEMs are also a bit more amenable to discussions. So that's obviously, yes, we would certainly expect that to happen. Our efforts are on. Again, the only issue is the OEMs are also facing huge challenge in terms of their own profitability. You've seen figures of Maruti Suzuki, you've seen figures of Tata Motors. So everybody is under the same pressure. We would certainly be targeting improvement in that aspect. Certainly, yes.
Thank you very much. Due to time constraints, we'll take that as the last question. I would now like to hand the conference back to the management team for closing comments.
Okay, thank you. And thanks for some interesting observations and some good questions, which we can also mull over and see how we can, keep on improving. But it's like I said, while not sounding too gloomy on the outlook, but yes, we also have to be real at the same point. We had expected at least some better revival happening after the festive season, which is not entirely happened. But we still hope that the last quarter, which is Q4, will bounce back with some good numbers because obviously people will want to liquidate inventories. There may be some fire sale of BS4 vehicles because there's a deadline announced as regards the sale of vehicle, the registration of vehicles. So that is going to be certainly one part which may lead up to people buying. If we saw what happened during the BS4 time as well. So we are hoping that yes, that should certainly lead to some revival. But as I mentioned, we are looking at it as an opportunity to improve all the possible aspects in our costs, and I can only share with you that the progress is good on that front. May not have translated into numbers because the reason I mentioned the downfall in top line in Q2 was significant. So whatever we did was still not sufficient. So it's like a treadmill that you keep continuously improving. But yes, I think going forward we'll hopefully certainly be looking at better margins overall, and our vision remains intact and our growth plans remain. We keep pursuing them. Our R&D efforts, as I mentioned, our efforts on improvement of quality, investing in talent, that continues. So let's hope that we have some better news in the coming year. So thank you once again for all, and hope all of you had despite this gloom in the auto industry, hope all of you, I'm certain, had a very good Diwali. So thank you once again.